And starting with the sugar prices, which have declined for a third straight day on rising supplies and sluggish demand, as bulk consumers were making fewer purchases due to winter season. Mills in India are expected to churn out 24 million tons of sugar in 2012-13. India has contracted also to import 9,20,000 tons of raw sugar since the season began in October, turning into a net importer for the first time in 2 years despite surplus stocks at home. The impact on prices, for that let's go across to Abhinash Verma. He's Director General ISMA and he joins us on a Delhi phone line. Abhinash, hi, welcome. We are looking at a very good crop. The exports haven't happened too much and the imports on the other side really seem to be streaming in. How do you look at the scenario?
First of all, let me clarify that 9.2 lakh tons of sugar is being imported, but out of that about 1.75 or 1.8 lakh tons are for the domestic market. The balance would be under the advanced license scheme, and that therefore out of 9 lakhs, I think almost about 8 lakh would be for 7.5 lakh would be for re-export. So only about 1.5 or 2 lakh tons is for the domestic market.
How much of that do you see impacting the prices? Because the prices have continued to decline in the recent few sessions again.
I will not say that all the prices have been coming down only because of import of about 2 lakh tons. It's mainly because of two other reasons. One is there is a very, very fine balance between the demand and supply this year. In fact, there is a small surplus with us. Secondly, the prices have been coming down because of a very high quota of non-levy sugar for the December-March quarter. And we have represented before the government that we are unable to sell a very high quota like this. Because last year, if you see, this 70 lakh ton was for 5 months and not for 4 months. And I believe that the government is examining our request very, very carefully. And therefore, we expect some kind of a positive decision in the next 1 week. And therefore, if the government is going to allow us some extension or going to allow some relaxation, I believe the prices should now stabilize after this.
Avinash, there were also talks last week in the market about a possible import duty as well on sugar. Do you see that happening?
Yes, that is one of the agenda items of ISMA also. The industry has been clamoring for an increase in the import duty because, as I mentioned, we have a surplus in the current season, and therefore we don't want any sugar to be imported from outside. We have been requesting the government, and the government has been informing us that they're very actively considering our request. But I think the decision would take another 15-20 days because they want to really wait for the crop figures to firm up in the next 15-20 days.
In the meanwhile, Abhinash, what's your sense coming in for sugar prices? Because 3,200, 3,300 has been holding into the markets there. How would you see the prices panning out?
Generally, if you really look into the history, generally the prices do come down in the crushing season because there is pressure on the sugar mills to pay to the farmers and there is some kind of a pressure to sell their sugar early. But as the season would close this year slightly early by end of February in Maharashtra and by the middle of February, I think Maharashtra and Karnataka would have closed down and UP would close down by March end. So I believe from the middle of March, the sugar prices should firm up slightly. And the mills realization to the mills should be slightly better from then on.
All right, Avinash, we'll let you go at that. So the prices are looking into a consolidation mode as we are into the crushing and the winter season as well, where the demand usually is on the lower side. But going forward, some support is expected in that space. Today, of course, 1% of decline, 3225 on your screens for sugar. Two other commodities then, and the chana prices were trading steady today as higher area under cultivation and supplies from the new season crop were offset by the fears of crop damage due to frost in Madhya Pradesh and Rajasthan. There you have 0.25% of decline coming in for prices. In spices, turmeric futures fell on sluggish demand from local buyers and amid amounting stocks, while the lackluster exports also weighed onto the prices. Pepper futures rose due to winter demand amid limited supplies in the local markets and lower stocks, though the estimates of a higher output and weak exports limited the upside. In Jeera, you saw the prices decline due to expectations of a greater area under cultivation and a better crop as well, while a weak spot market also weighed onto the sentiment. Two grains where wheat futures were trading firm today on the spot markets, while the futures saw nearly 1% of a decline coming in. But the markets are expecting strength in prices because of export demand following a recent surge in the overseas prices and on lower supplies due to the lean season. The Indian wheat is being offered at around $325 to $330 per ton, while the other Australian wheat is available slightly expensive at $350 per ton into the markets. Vijay, what's your sense, especially coming in for wheat prices, nearly 1% decline? How would you trade it?
Manisha, I would be a buyer on declines because the decline that you're talking about is in the near month futures. Whereas if you look at March, April and May, the decline is almost negligible. It's almost 1 or 2 rupees per quintal, which is hardly anything at all. And as we approach the summer season, my guess is sugar and wheat are likely to move in tandem in the upward direction. So if I get May futures comfortably below 1385, 1386 kind of levels, I would be a buyer on wheat.
Vijay, also, what's your sense coming in for the edible oil space today? We've seen some support continue for a third state session. Do you see it continuing?
It's more of a creeping rally rather than an outright exuberance-based buying, because as we head towards the summer season, my guess is the demand is likely to taper off, because in Malaysia and Indonesia, the palm fruit stops yielding fruit. Palm trees stop yielding fruit between December to March. And as we head into April, February or mid-February, the prices of crude palm oil and soya oil also will start to taper off. So whatever rally is to occur will occur in the next 3 to 4 weeks at the best. And that's where the traders need to start locking in their gains.